Hello, is this audible now?
Yeah, better.
Okay.
So, how are you doing?
All good, yeah. How are you guys doing?
Good.
Perfect. So I think it's been a long time since we last
Yes,
had a talk.
you were the first one we had an AMA with.
Good, good, good. How's it going actually? All your AMAs and everything. I've been following up all those things. So yeah.
Yeah, so I just hope this time you will get everything that you mentioned last time to me about the improvements.
Sure, sure. I think we're pretty much prepared on what to talk as well. Um,
Yeah.
yeah, it's quite interesting though. Since we had a talk earlier, there is quite some lot of shift in the market as well. I mean, quite a lot since we last had a talk. So it will be interesting compared to what we had in the previous thing. So we can start around.
Okay. So I'll just quickly give you an introduction. So starting with the company, as you know, we are the leading blockchain development company, and we have been in this space since 2017, situated in Allahabad, Uttar Pradesh. We are focused on integrating cryptocurrency with the traditional financial system, and we have been advancing blockchain and Web3 tech. Coming to our specialization, we specialize in delivering projects related to smart contracts, P2P, Web3, token development, coin development, and everything that comes in between. Okay. So, can we have a quick intro of yours for our audience?
All right. So this is Jetso Analin, and I've been in this Web3 space since quite some long time. Around started way back in 2015, uh, and we've been into the product sector and advisory and other things on the Web3 side since then. So we have two locations right now where we operate around. One is in Mumbai and one is in Madurai, with more than 60 plus people working under us, and quite some successful journey we had around with different government in India as well as outside India, majorly outside India as well in the government side. So we've been good in terms with the advisory for them, and majorly into the development sector and the future side of it. Plus, we've been into the education sector as well for quite some long time for meeting different students, and we're proud to do that. And we've almost done more than 50,000 to 60,000 plus students, and introduced them to blockchain since then, since 2015 16. And right now, we are more into the expansion space on different aspects of the Web3, and that's what we truly believed as well. So, if most of the companies that pivoted from um, Web3 to other spaces like AI and other things when the market went down, but we chose to be on the Web3 side. And many of the companies, those who were earlier since 2013 14, have come up into the Web3 space as well. But we what our initial vision and the current vision is also revolving around Web3 is what made us stand throughout those ups and downs still here. And we have not changed our direction, and we have not changed the path since then. And that's it about me. So I think you'll keep it short so we can get it up quick.
All right. So, before starting the session, I'll quickly introduce you to my team. We have Afzal, he's the blockchain marketer, Anand, he's the Web3 enthusiast. Then we have Ruchi, crypto community manager, and Shakib is the Web3 consultant. And me, Angela, I'm the project manager here.
Perfect. Perfect. Good to meet you guys all.
Also, I'd with the first question. As tokenization is moving from hype to reality, what real world assets will mass tokenize first? Real estate, bonds, equities, or something else?
Okay, I'll just keep this answer a bit short because mass tokenization starts when paperwork is heavy and cash flows are clear. So I bet my money on the money style products like T-bill wrappers, invoice receivables, and printed credit first and then bonds more broadly, because real estate will grow too, but property has slower settlements, title complexity, and local laws which comes behind it. So equity will be the later one because of the market structure and the regulation. But what I am more betting on is these receivables, invoice receivables, and T-bill wrappers and other things to come inside the RWA sector and boom into the space. Uh, because, as I said, the real estate is still growing and it still needs some space and time to compete against the entire masses and the centralized operations which has been going around. Of course, I do support complete decentralization, but revolving around with a lot of these paperworks and things which are around the corner, I still feel that uh, the actual real estate part is still new and still early at this particular point of stage. People are experimenting it with it, but I'm sure for the masses it will take time, it will take regulations, it will take a lot of paperwork to kick in and then get started. So for me, the initial bet will be on these types of invoices where the masses are involved, and then the secondary one will be around the manufacturing and industrial use cases where these types of RWs can be easily implemented on a private scale basis. Real estate is something where you need government involvement inside it, but these are the sectors where even a private entity can bring in a mass change. So I would expect these two to three industry to grow faster and get mass tokenization adoption.
Hello. Hello.
Yeah, I can hear you.
Yeah. Institutions like the NYSE exploring the blockchain-based trading. Do you believe that the traditional finance will fully migrate to on-chain, or it will still remain a hybrid approach only?
So if you're talking about the trade fee and everything, so this has been a question since a very long time, and uh, even NSE, the securities bonds and everything, which is revolving around it. So it was, I think, way back 2 to 3 years, we had a roundtable conference with NSE people and with NSE founder it's himself. So the thing is, they were exploring around in blockchain at their offices, and they were doing things revolving around the Web3. Even NPCI has its own blockchain unit, which completely develops on private blockchain networks. But the thing is, these cannot be fully on chain. For me, hybrid wins for a long time because the fully on chain dream is real, but market needs identity, compliance, and finality guarantees. So the most realistic path is on chain settlement plus off chain compliance layer with the regulated intermediate still playing role. The backend becomes the blockchain and the front end remains familiar to what these government entities are looking forward for, or whatever these major fintech giants are looking forward for. So the backend can be on the blockchain. So for me, it's an hybrid solution, not complete on the full on chain solution.
Hello. Yeah, my question is, stable coins are becoming the payment rails, not just trading tool. So, do you see them replacing their traditional remittances or settlement system in the next 3 to 5 years?
In many sectors, yes, because especially in the B2B settlements and cross-border treasury movements, stablecoins have already solved speed plus cost plus 24 into 7 settlements. So what slows full replacement is not the tech, it's the banking partnership, compliances, and local cash out rails. So stablecoins becomes the rail, but fiat endpoint still matters right now. So in such cases and such conditions, I will still say it will take some time for stable coins to be on the mainstream for each and every country, especially on the remittances side and for the cross-border transactions. But regardless of that, we do still have a lot of other solutions and cross solutions right now, which is available at the market. And a lot of founders have been tirelessly working out to bring such solutions to general users. And I'm sure that any of these solutions which the founders are building right now will be on the mainstream side in the next 3 to 5 years, like what we are seeing, like what we have seen earlier as well in the uh, payment revolution on the crypto side. So it will be on the mainstream, but considering there should be some banking partnership compliances and other things which should be also involved in any of these countries. So even if there are 2 to 3 countries which are on the plus side of it, it will be much more beneficial for the off rails and then transfers of these funds from one place to another.
Hello. Uh, we know that India has one of the largest Web3 developer bases globally. So my question is that what missing for India to become a true Web3 product innovation hub, not just a talent supplier?
So I would consider these three things. Okay. So three things. One is the regulatory clarity, especially around taxation plus the VDA compliances. Second is the distribution. This is where most of the Indian founders are missing. So Indian founders need global go-to-market playbook, not just engineering. We are good at engineering, of course. I'd say we have a lot of developers, lot of good minds, mind me. So it's a ton of engineering work done over here in India right now. But what we lack the most is the distribution, which is the main, and that's where most of the other countries are playing around with it. So you, me, everyone can develop a good Web3 application, a Web3 solution, which can change the market and XYZ. But what's the point of it if you are not able to distribute it to the masses? So that's where we are lacking around, and that's the one place which we need to work around as well. And the third thing is risk capital plus patience for protocol and deep infra. So India has talents. What missing is the product ecosystem, like founders, capital, regulations, and global storytelling that aligns these all together. So most of us are good at tech. We know how to develop, but we lack in these types of distribution, storytelling, and other things. And that's where investors are also interested more on, like, what's your storytelling and what's your distribution network is like, what's your community belongs to, and how many of your community are going to use these products instead of just mentioning out on different social medias. So that's where we are lacking around, and that's where we need to work on as well.
Next question is, like, wallet UX is now considered the biggest adoption bottleneck. So, what does a Web2 like Web3 wallet actually need to succeed?
Mhm. For a Web2 like wallet, which for me, for me, it needs to hide the complexity which without compromising the ownership. So there are quite some lot of wallets like these available right now in the market. I'll tell you these. I'll tell you these functionalities and properties which needs to be present in that particular wallet, so you can correlate with what types of wallets have been available. First one is the gasless and abstracted fees, or pays fees in any token. Okay, and then social recovery or key recovery. So the seed phrase must not be there, because lots of people still rely on social media in in social media logins and other email based logins in the current scenarios, and that will especially help them to transit from web 2 to web 3. So solving their recovery phrase complexity and other thing, because most of them still fear around on the recovery phase. What if it's lost, it's gone? Okay, and then one click onboarding. So if it's email or it's any other things, phone number or anything which you have, so you can one click uh, You can enter your email, OTP, that's it, done. And then fraud protection UX, that should be very much present. And most of the wallets right now, from MetaMask to Trust Wallet, right now have these kind of prompts, like clear sign prompts, risk warning simulations. These types of things are still in most of these wallets right now. And in-app support plus transaction status clarity, like what banks do have. So people don't hate crypto, they hate the uncertainty, right? So that's the agenda behind it. So if you want to make it simpler, these are the steps. And I know many wallets have implemented these things, and there are lots of wallets which have already solved these types of complexities around it. So for me right now, what's most important is the fraud protection UX. So that one thing might be missing and is missing on most of these wallets. And those who are already decentralized, like MetaMask Trust Wallet, and they already have a good UX protections and clear signing prompts and everything. So once these types of startups comes in, those who are trying to solve UX frauds, then there is a huge success with these types of web 2 like wallet.
My second question is how important is account abstraction in onboarding the next billion users? And is the ecosystem overestimating its impact?
Mm, for me, if you ask me, it is essential, but it's not a magic. Okay, uh, it improves the UX a lot, first thing, and like session keys, paymaster recovery, but it doesn't solve trust, education, or bad apps. Think of these abstract account abstraction like UPI for wallets. It removes friction, but you still need great products on top. Okay, so you have it already, you have the solution already with you, the account abstraction is present, but you need a great product on top of it, like the UPI type of things, which happened with our actual banking wallets, which made our transactions very simpler. So we need something like that instead of a complex things which goes on and on, making the users guess what's going to happen next.
So, from an investor or builder's perspective, which sector look most undervalued right now? Is that DeFi, RWAs, Web3 gaming, or privacy tech?
Which one is more?
More undervalued.
Okay. So which all options you said?
Option like defense, RWAs, real world asset, Web3 gaming, and privacy tech.
So if you ask me which is still undervalued, I would say the gaming part. I mean, it happened way much earlier. Gaming and the most of us even forgot about the metaverse things as well. So these things were way early of time. They came in, they left. Okay, they came in as a hype, they left as a hype. But what I would say is these types of things were way too early than what we have expected. So these are still underdogs, still ready to explore in the near future. I will still not say right now, but in near future, definitely yes, these types of options will still explore a larger range of audience coming into the web3 space.
Yeah. So according to you, with regulations tightening globally, can decentralization and compliance realistically coexist?
Yes, if you don't look at it tightly, but if you separate the layers. Okay, decentralization can live at a protocol and a settlement layer, while compliances lives in an access and interaction point. So KYC gates, risk scoring, permission pools, regulated front ends, and the future is compliant decentralization, not anarchic decentralization. So if we try to separate these layers and then make sure that we work hand in hand with these types of compliances layers and the layer, then it can coexist.
Hello,
Yeah,
I'm audible?
yeah, you are.
Okay, okay. Raw tokenization promises liquidity, but market need trust. So, what role do audits, oracle, and legal frameworks play in making RAWs viable?
So you're talking about the audits parts, right? Like
Yeah,
how you're gonna make these things viable.
viable
Okay. So you're talking about in general market, or how's it?
in general market.
Okay. So if we look at audit trials and legal frameworks and other things, right? So there is a clear difference between demo and a real market. So in demo market, you don't have any kind of obligations of audits and other things which comes into picture. But if you need to take it to user side, so there is a you need a trust tag. You need a trust tag. Okay. So first is the legal enforceability, second is the audit, and third one is the oracles. So these are the three layers of stack which you need in any kind of application. I'm not talking about only one single application, but in any kind of application, one is legal enforceability, wherein if you're looking to build any kind of application, are you properly in exercising its rights towards that particular country? Is that properly legal to operate in that? And things like that. So that needs to be maintained over there. And for the audit, the smart contract, the layer word token assets audits needs to be performed, because there are still, even after you perform the audit, there are high chances that you still might get into an attack. So in order to avoid it, so you need to make sure that you provide with the best audits to that particular smart contract, because once it's deployed, it's not changeable. So you need to make sure that these types of things are pre-audited right before you take it to the real market, because once you collapse at the real market, it's gone and completely gone for you. So it's good to fail, I mean, it's good to test and fail in the earlier stage rather than take it to the real market and then make a mistake over that. So audit trials and everything must, it's a must to any kind of application.
Um, so we are seeing a shift from monolithic chains to modular blockchains. Is this a genuine scalability solution or just added complexity?
So if you ask me, both modular is a real scalability path, but it adds operational complexity. So if you're building a consumer app, but it needs additional operational complexity, or it adds more additional complexity. So you want you just want reliability and simplicity. Modular is best when you need high throughput, specialized execution environment, and cheap scaling. So the winning terms will be to make modular invisible. You don't need to show that you're completely modular or anything, but it needs to feel invisible. If it adds more complexity to your application, then it's still a failure. Okay. So yeah, if you have to choose the right path based on that.
Cross-chain hacks still dominate the crypto losses. So, do you think interoperability will ever be truly secure, or is it an unsolved problem?
Cross chain, according to me, it can be secure but not perfect. So most hack happens due to bridge trust assumptions. The safety models reduces trust. So, like, for example, the light client, proof-based verification, and roll-up bridges, and these types of minimizing external validator sets. So these will improve the interoperability, but the industry must accept that more security is equals to more constraint. So when you keep more constraints into place, you need to also make sure that each and every layer of your cross chain is well audited, and the code is properly went through different types of security measures. But if you ever miss any of these, it's still not a perfect one. So I would say most of these applications right now are still using a terminal bridge right now to communicate between these two, I mean, any of the chains. So at the end of the day, it's all about how you truly make it more secure on each layer by auditing it thoroughly with security and other entities involved around it. So it all depends upon how you build it around. So if you ask me, it is truly secure, I would say maybe and may not. It's not perfect, but it will be.
Okay. So, how do you see AI and blockchain converging data ownership, autonomous agents, or something else entirely?
So I see three big convergence. So one is data ownership and provenance. So who owns the data, training data, licensing, and audit trials. And then the second one I will see is the agent payments, like the AI agent transactions using stablecoin and crypto rails and other things. And the third one I will see where the convergence will perfectly work is the verifiable compute and proofs. So proving outputs and actions are valid, and the real unlock is autonomous agents with accountability, identity, and payment. So these are, according to me, where AI and blockchain convergence will rightly mix it.
Many Web3 startups still struggle with the revenue models. So, what business models are actually sustainable in Web3 today?
So if you ask me about sustainable Web3 business models today, uh, the sustainable ones looks boring. Okay, trust me, it looks boring, but in a good way. So let's, for example, first one is infrastructure SaaS, like the nodes, indexing, wallets, compliance toolings, I mean, for any types of exchange to build it, like proper infrastructure model. So if you build those compliance toolings, wallets, and other things, then it looks strong. Okay, that's a sustainable one. And then the second one is tokenization platforms. I'm not saying you tokenize everything, but the issuance, the fee, the custody, and reporting, all those basics things, the base level things, right? The issuance of these tokenizations and the custody and the reporting as well, all those report generations and other things. So those types of tokenizing platforms. And the third one will be marketplaces with real volume. So if you are bringing in good amount of volume in any kind of marketplace, it can be any type of marketplace, the take rate or the fees which generates with it is a good model involved around it. And the third one is always the evergreen model. I like it. The third one is, sorry, the fourth one. That's the fourth one. That is the payment and settlement one. So here you earn on fees and spreads, and that's one of the best and the I would say one of my favorite one as well on the payment side. And the last one would be the B2B protocols. So with revenue sharing and service layers. So that's the last one where Web3 business models is sustainable. So if your revenue depends on number to go up, it's not a business. Okay, so if your revenue is depending upon number, if my number go up and then I'll earn this, so that's not your model. So if you want to build any kind of sustainable business today, so these are the things which will happily coexist.
Okay. So, are DAOs evolving as expected, or have they failed to replace traditional governance structures?
Okay, DAOs didn't fail. They were overpromised. Okay, DAOs work well for treasury, governance, grants, and protocol parameters. They struggle when you need fast execution and accountability and legal responsibility. The next generation is DAO plus corporate wrapper plus clear operator rules. So if you add these things, then it's a good governance model or it's a good DAO. So right now, DAO has been used each and everywhere where it is not necessary, but these are the things where it can be, well implemented, the treasury governance, grants, and protocol parameters.
Okay, so wrapping up this, I'll ask you the last question. According to you, if we look ahead 5 years, what will Web3 be remembered for if speculation disappears tomorrow?
You mean the speculation disappears tomorrow? I think it hardly will happen, but yeah, if we take about it hypothetically, so it will be remembered as the infrastructure that made the internet ownable and programmable. So programmable money like stablecoin, global settlement, 24 into 7, verifiable ownership like assets, identity, and credentials, and new coordination model like network communities, DAOs. So these speculations brought attentions, but the lasting trust and legacy ownership plus settlements will what it will be remembered for.
Okay, that was all from our side, and thank you so much for your time and sharing information.
Perfect. Thank you, guys. Thank you so much for having me once again. I'm happy to
Thank
be
you.
here.
Thank you so much for your
Thank
time.
you.
Thank you.